All right, good morning, you guys. Happy Labor Day weekend to you folks. All right, thanks for joining on. If you're in TRT, this video is obviously being recorded. Well, it's actually live streamed on YouTube, so I will drop a link in our chat room later if you missed it, or yeah, if you missed it. But let's go ahead and get started in about 30 seconds or so. What the heck is that? Do you know the sneakers app gives you a ringtone when a shoe drops? It's annoying. Okay. All right, let's go ahead and get started. Okay. All right, guys, welcome. Market update September 2nd. What a volatile week. We had a lot of head fakes, a lot of whipsaws back and forth. If you are a bull this week, well, quite frankly, not good. This is what you're looking at in terms of what's happening in the market. So we'll go all through all that. We'll talk about S&P 500. We'll talk about Qs. We'll talk about the SPYs. We'll talk about everything pertaining to the market this week. But definitely looking a little bearish. My personal sentiment going into next week, increasingly odds of further downside as we take a look at the charts. But first of all, let's take a look at the headlines. Major stock averages slide for a third straight week. I mean, just as quickly the markets rallied after the June lows, we are kind of in a tough situation, right? 3 straight weeks of NASDAQ red, the S&P 500, and 3 straight weeks of losing. This 1 week here, the Dow Jones minus 2%. The SPY, SPY minus 2% also. The Q is a little bit more heavy on the Q side, 2.6%, and IWM, the Russell small caps, 3.5%. Now, obviously, the market's still concerned, very much concerned about Powell's comments at Jackson Hole. I mean, it's just that lingering effect. And it doesn't help that the Feds kept speaking this week, including Fed Meister, saying that they will most likely, or they intend to keep the rates raised and elevated into 2023. No rate cuts coming. They're still not pleased with the inflation coming in. And of course, in about a week and a half, September 12th, we do have the latest anticipated CPI data, and the week following that, the FOMC meets again for the next rate decision. So, I mean, let's take a look at the charts, right? I mean, the Powell just broke all the charts. But before we do that, another headline this week was stronger than expected jobs data. Yes, we didn't come in at 526,000. That's good, the non-farm payrolls, NFP. But we did come in a little bit higher than the anticipated 300,000. Some sources, Bloomberg estimated 297,000. Dow Jones estimated 315,000. So that was in line. All right. But, the markets briefly rallied on Friday morning off this data, but it did not sustain itself because guess what? Nord Stream decided to shut down the gas pipes. So that caused the market to dip right back down. Now, if they reopen up those pipelines over the weekend, maybe Monday, Tuesday, maybe you can see the markets come back a little bit. But definitely the markets like this data stronger than expected. But guess what, folks? The CME, the Fed future rate, is still pricing in a 75 BPS rate hike later this month. So even though with this job data, which is stronger than expected, the market's still pricing in the 75 BPS. So that's not going to, this is not a great, I mean, the action was kind of muted, right? We went up to about 303 on the Qs, and it just pulled back from there all the way back down to 294, 293 at the end of Friday. All right. So you can still get the sense that, yes, the data was encouraging in terms of the job data, but it's not good enough, right? Because it still suggests that the Fed has more room, right? The economy is still strong in some sense. So that means that the Fed has more wiggle room to continue to raise rates and continue it possibly into 2023. If you take a look at the chart, this is what happened, right? On the S&P 500, this is the daily chart here. We ran up pre-Jackson Hole, and post-Jackson Hole, we are below the trend line now. And this is the NASDAQ composite. One thing to note here, all right, and this is the McKellen oscillator here, all right? you have a lot of selling in the last several days of the session or of this week. Okay. We are at the lows in terms of the money leaving the market. And look what happened in the previous dips here, here, here. If you're looking at this oscillator, and finally the June low. So we are, in a way, if I can even say the word capitulation. All right. In some sense, there's that feeling of panic. All right. Whether or not we're going to see a new low in the market going below 11,000 on the NASDAQ composite, nobody knows for sure. But certainly this is noteworthy in the sense that there's a lot of panic selling over this course of this week. So this is obviously the lowest it's been in terms of this particular oscillator since the beginning of the year. Okay, so keep an open mind as you go into the week and the following week. I know we have a lot of data points. I know the charts is very suggestive in terms of a continued bear rally or more downside. But this is looking pretty interesting in terms of the selling that's happening. Same thing on the NASDAQ. Here's the NASDAQ composite. This is a daily chart as well. Once again, here you have a very steep selling and even panic all the way down to December lows here on this oscillator. If you look at the S&P 500, this is also the S&P 500 daily chart, and the McKellen oscillator is minus 60, and we haven't seen this low since June lows. Okay, and we are still at a higher low, obviously, since June. Okay, so there could be some indication that this is bottom. I'm using the Bollinger Bands too. All right, throughout all of this, throughout this chart, look at the Bollinger Bands and how much we are pretty close to the bottom here. I'm not saying we're at the bottom. I'm just saying it's at the bottom of the Bollinger Band. All right, which could be suggesting that a potential bounce is coming, especially with the McKellen oscillator this low here. All right, if you guys have been following me, I've been I always track the 200-day average, S&P 500 200-day stocks above the 200-day moving average, and we were at our highest point in August. Okay, over 50 something odd percent, and now we're sliced that right in half. Now we're at 25%, which looks like what's happening here during COVID. All right, during COVID, you did have some upward climbing, and then eventually broke out, retested the lows. All right, and shot back up anyway. All right. But in this scenario, we have increased odds of bear case. Okay. That because if you look at the thrust, okay, the thrust downwards on this weekly chart, S&P 500, 200 moving day average stocks, not looking very good if you are a stock market bull. If you look at the S&P 500 seasonal composite, August 15th through September 30th. All right. This is very, very interesting. All right, we are here on September 2nd. They do say, all right, seasonality suggests that the September is practically the worst month on record in terms of seasonality goes. However, you still have a few wild cards this week, or this coming week, and the following week, So it's going to be a volatile type of September. We have not seen a September in the bear market history, all right, where the Feds were raising rates, where the inflation was high. Okay, and a lot comes down to CPI data coming out on September 12th. Once again, if the CPI data comes out over 9%, oh yeah, I think the increasingly the odds of a newer low would be coming. However, if we see even more cooled off inflation, I remember it was 8.5 last month. If it's like 8 point, what if it comes in at 8.0, all right, or at 8.5? You could probably see a bounce coming up. All right. This chart here, I'm going to credit Shavako Capital. I love that guy. All right. If you guys follow him on YouTube, great videos, very informational. All right. One chart that I pulled up here, years when stocks were down 10% or more at the end of August. If you are a bull, you probably want to exit this YouTube. But the median drawdown or average drawdown, if stocks were down more than 10% at the end of August, look at this. The average median drawdown, all right, is additional 20%, approximately 20% from the current levels. We are here. Okay, so this would suggest that if this history or this trend continues, 1 year drawdown, all right, we would be looking at 3,100 range of S&P 500 1 year from now. So that would put us in obviously into next year. Okay, so this is a very interesting chart, very interesting statistic that you have to be aware of. Does this mean that you're just going to buy puts every single day for the next year? No, not necessarily. You obviously have to play the day. All right, QQQ versus SPY. All right, encouraging trend pre-Jackson Hole, right? Pre-Jackson Hole, we were in this uptrend. Very nice, very encouraging. And now we have dipped below the supporting trend line. All right. So again, I'm not here to push upon you any bull case scenarios or any bear case scenarios. I'm just here to tell you, hey, this is what it's like. All right. And you have to play the chart in front of you. So as a bull, this is starting to get discouraging after this particular week that we just had. Next Thursday, big day. All right. Next Thursday, mark your calendars, be up ready and ready to go in the morning. Europe, ECB. Okay, Europe is going to release their rate decision at 8:15 a.m. That would be pre-market. All right, that would be 8:15 Eastern time. During that following 15 minutes later, you have jobless claims. Okay, so this is going to be a big one. After that, you have the ECB press conference. And after that, you have what? Fed. I don't know what he's speaking about. I couldn't find any information in terms of what he's going to be speaking about right there 20 minutes before opening bell. But Fed Chair Powell is set to speak on Thursday. It might not be anything. Like I said, if you guys have information on it, please do some research. I don't know where he's speaking, what he's speaking. It could be a big nothing burger. All right. So before we go to the charts, all right, CP, once again, just reminding you, September 13th will be another big day following next Thursday, September 21st. Okay. Stop asking me, when is the FOMC meeting? Please write this down. FOMC meets on September 20th, rate decision on 21st at 2 p.m. Eastern time. And before we go to charts, no bull, no bear bias, play the day in front of you. That is our motto here in TRT. Market, as a reminder, market can remain irrational longer than you can stay solvent. But I will say this from the beginning of my presentation here is that, my personal sentiment, yes, there is increased odds that we could see lower lows. All right, so let's go ahead and go into my objectives for the Qs, the SPYs. We'll talk about Apple, Tesla, etc. Going into the following this new week here. And by the way, there's no trading on Monday, so you don't need to get up early. However, it is going to be a short week. All right, if we look at this now that we look at this a step back on a weekly chart on the Qs here, yeah, you're looking at a possibly it was a gigantic bear flag just to begin with, right? From this, so you had a bear flag here, a potential bear flag here that broke down, and then we had a very long, right, almost nearly 2 months worth of upside on this particular bear market rally. All right, so obviously we broke down this following or this last week. Targets going into the following week. All right. We know that since Thursday and this past Friday, we held the 293, 294 area. All right. And we saw that once again on Friday. All right. The market just ripped faces on the downside, hit the 294 and then bounced again. So why is that? You have a lot of volume support here. This is where bulls decide to step in. If there is more data coming out this week that is bad, if there's more bad news on the way, then you can see that level break down obviously pretty quickly. Okay, so this area is obviously very much so contested once again. So I remember on our last week's video we talked about this area. So this is the area that is going to be contested by the bulls. If you are a bear, you need them to give up this level. Now, if we do break this level, I can see that the weekly target going into next week will be 287.77. So I'm going to put a downside target at that. If there is some positive news out of ECB, I do think that they're going to raise interest rates also by 75 basis points on Thursday. If Powell says anything hawkish, that's going to break through. All right. So you can see potentially more downside. If we can somehow reclaim that 300 level would be here. Okay. It's going to become resistance. We saw that with the stocks, the Qs struggled around the 300 area on Friday, just kept stalling out at 302. All right, you're going to see some resistance there. But the 9 daily EMA is at 305. Okay, so any upside this week, I can't see anything positive happening on the markets. Anything can happen, obviously, but that would be an area of rejection. So if we see any upside, all right, then I'll just put, then I would say that 305 is the best we're going to get this coming week. Obviously, going into the following week, it'll be a little bit of a different story. So we'll see how the market plays out, because at some point next week or following week, before the CPI data comes out, the market is going to pump. Okay, so that is the cues for on the daily side. Let's go ahead and look at the regression channel. As you know, this is the one that I love to use. All right. Again, right, 295. This is the 1 hour regression channel. We're stuck here in this area. This 295, 293, 294. It's just going to hang out here. All right, could go sideways, but the test, all right, you can see it dipped down to the mid channel here and held the support. So if we do break a lower low, then you're looking at 293. And if really bad stuff starts happening, boy, all right, we're back down to potentially 287, 286 area, which is lines up with this number here. All right, so that would be the downside target for the Qs going into this new week. Let's talk about the SPYs. Once again, SPY closed under 400. Obviously, 400 was heavier. It was contested early in the week. All right, but that broke down just as the same. As you guys know, the upside target was 401.74. All right, or downside target was 401.74. From last week's video, we obviously hit that, and we are back in this June area, June, July, August area, where it's just contested by the bulls, and it's just hanging on to dear life. Okay, once it breaks that 390. Okay. I would say a downside target going into this following week would be 385. If we see any upward momentum, then your resistance, all right, support becomes resistance, right? 401.74 would be an upside target going into this following week. All right, so that is your SPY. Let's talk about IWM. I never talk about IWM that much, but the IWM has suffered a little bit more than your Dow and your Nasdaq and your SPYs, right? All right, so we're holding on to that 180 level. All right. And you can see that this area from the July highs is hanging on a dear life. If this particular level starts breaking down, you're going to see possibly 174 or 175 area right about here. 175 area would be the next level support for the IWM. All right. Resistance is going to be right above. All right. There's too much resistance right above at the 183 level. Going into this week, man, it's a short week and all. Play conservative, wait for the right setups. It's just, I feel like this coming week is just going to get a little choppy around the markets as the market waits for data. If Nord Stream does not come back online, then that's potentially more downside. And that took the market by surprise on Friday. All right, let's talk about the big monster Apple. Okay, Apple, as you know, all right, filled the gap from last week's video. I mentioned the target would be 157.74, so that hit. So we are at 155.81, hanging on to the EMA 200 on the daily. This is my EMA 200 on daily, and that is not looking very good. It's just hanging on to dear life. Once that breaks, all right, you're looking at potential support at the 152 to the 150 level, and that's not very encouraging at all, okay? If you look at the weekly chart on Apple, increasing selling on the volume side, okay? The weekly suggests there's still more room to go, and it's actually crossing over to the bear side, all right, in terms of the CCI goes. But on the daily side, I will have to say across the market, all right, all your stows on the daily have reset from the most recent highs in mid-August. All right. So we're crossing down here and we're starting to cross on Apple here. Okay. You're looking at CCI starting to come up here. All right. So as you go into this week, you can start getting that sense, well, if there's no bad data, all right, markets can just chop around for a while, all right, until something happens. But you're starting to see that the daily anyway, all right, is completely on the reset. Now, there are discouraging signals too, right? The discouraging signal obviously is that on Friday, we had good selling volume. All right. And last Friday, we had good selling volume as well. So if you're looking at all this, this week, we had great volume, either on the bear side or the bull side. Good volume above the 20-day simple moving average of volume. Okay. So that means the market participants are coming back obviously on the sell side of things. All right. Little bit of encouragement on the week on the daily hammer on Thursday, but that wasn't enough. Okay, the bears defended and pushed back down under 300, which was quite dramatic for this week. Okay, one thing I am looking at. All right, Amazon. Okay, Amazon is almost there. It's not quite filled the gap yet, and I think it will soon. Okay, so downside target, that gap needs to get filled at 123, 120, 122.95 level. That gap eventually got to get filled, but watch out. You have big support here. So we're at 127 as of close on Friday. All right, this is going to come into play at this 123 level. So if this level holds, this could be a good swing, right? Potentially, even if you just want to buy shares, all right, for a quick swing, or you want to buy some month-long option calls, okay? Amazon might be worthy here at the 123 level, all right? So with that being said, I hope you found this informational. I'm going to look, see, do you guys have any questions? If you're on YouTube, feel free to drop a question. I don't have much more to say than what I've said so far. Let's see. Hang on one second. Pop up chat. All right. Hit that like button. Okay. Thank you. Good morning. Okay. Appreciate it. I believe early Monday bounce, and who knows, the overall market is looking gloomy. Yeah. Good morning. Okay. So no questions from you guys. So once again, going into this week or the following week, there's going to be big data coming out soon. And also, of course, Powell, like I said, I don't know what Powell is going to be speaking on Thursday, but ECB, Europe, it will. All right, their decision on the rate hikes will make an impact here in the stateside. All right. Once again, just to summarize my, what I presented so far, market breadth or oscillators are looking very, very low for where we are right now. The bands are holding for now. Okay. Especially on the S&P 500 and the NASDAQ. All right. You can make an inference that potentially there's a bounce coming, but there's got to be coupled with some good data, right? It can't just be a low volume pump, all right? A low volume pump, I'm going to be even more bearish. So that's what it's looking like so far. All right, guys. So once again, that's it for the update this week. Short one this week. I want you guys to go out and enjoy your long weekend. It's been a very exhausting week, certainly with the whipsaws back and forth, especially on Thursday and Friday, and good Lord. But I hope you guys made it out alive and green. With that being said, I'll go ahead and end it here and hope to see you guys back on TRT chat.